Hello, this is William Oughton, and I'm the Vice President of Claims here at Ontario Insurance Company. Welcome to our slideshow about the proof of loss document, which was put together to help Ontario agents understand what the form is, why it is important, and how to fill it out. This important information is for you as the agent, in case you are ever called by a policyholder who might have questions about the document. The question I most often receive from policyholders and some agents is, what is a proof of loss? On its face, the document looks like just another claim form, but when you understand the underlying reason for the proof of loss, you will see why it is such an important part of the insurance claim process. The proof of loss provides a formalized statement to the insurance company about the loss that has occurred. It contains some very important information, and it needs to be filled out correctly and completely, and then it needs to be signed and notarized by the policyholder. It will describe the location of the loss and any ownership issues for the property involved, and it will describe the value of the property before the loss. It will also provide information regarding value of the damage being claimed. When I explain what a proof of loss is to a policyholder or an agent, the next question I most often get is, why do they need to fill this out? To them, it seems like an unreasonable extra bit of work they have to do, and some are suspect that it's just a tactic to delay the payment of their claim. I completely understand this question and that point of view, and here's why. The proof of loss is usually sent to the insured after the adjuster has already been there, after they have completed their inspection, and even after they have done their estimate. The policyholder is probably thinking, shouldn't the insurance company already know all of this stuff? In fact, I've actually heard that question more than once from a policyholder. In most cases, yes, this is true. The insurance company is probably aware of the facts of the case before the proof of loss is requested from an insured. As I said, on its face, the proof of loss is a statement about the claim to the insurance company, but it has another important function. It provides the insurance company with a sworn statement by the policyholder regarding their version of events and their version of the value of the claim. Once the insurance company agrees to pay the claim based on their investigation, their assessment, and the information provided in the proof of loss, they will issue a payment to the policyholder. Now, here is where the proof of loss document becomes very important to the insurance company. If, after payment is issued, the insurance company finds out that there was some misrepresentation made in the proof of loss that was designed to induce the insurance company to pay the claim, the sworn statement and proof of loss can be used to prove that the insured committed fraud. This fraud issue is the important underlying issue, but the mechanism requiring a proof of loss from a policyholder is created in the language of the policy. Under many homeowners policies, a proof of loss is required when the insurance company requests it. Once a request is made, a policyholder has 60 days to return a completed proof of loss to the insurance company. Other policy forms will require the proof of loss within 60 days of the loss, and there is no requirement that the insurance company make a formal request. While an insurer can demand a proof of loss, they don't always make this demand, and in some cases, a claim will be paid without taking a proof of loss at all. This will vary by company, but the decision to make a demand for a proof of loss is often based on factors such as the size of the loss, any suspicious factors in the claim, or if there are any contentious issues over scope and value. So, if you are wondering why Ontario requests a proof on some claims but not on others, it's probably due to one of those factors. Now we can start to examine the actual proof of loss form. So here is an image of the sample form we send to our policyholders, and as you can see, the total amount of coverage has been written in the upper left-hand field. The remaining fields within this red box are fairly straightforward. In order to get the correct amount in the first field, however, our sample form refers the policyholder to the back of the proof of loss form and Schedule A or Schedule C. If you do go back to the back side of our sample form, you can see that Schedule A provides an area for the policyholder to describe all of their coverages. They can look at their declarations page to find those coverages. It is the total of these coverage amounts that will be written in the first line on that front page. The next section has some confusing language. It says, to the blank, and this often confuses people. A proof of loss is a statement to the insurance company, so this first line requires that you indicate the name of the insurance company. For us, that would be Ontario Insurance Company. The next blank says, of blank. This is also confusing. Of what, you might ask? This field requires the location of the insurance company, which for Ontario would be Shortsville, New York. Again, this image is of the sample form we provide to our policyholders with fictitious information for reference. The next line says, at the time of loss, by the above indicated policy of insurance, you insured blank. In this section, you would provide the insured's name and the risk that is insured. It could be something like the residence located at 123 Sunflower Drive in Canandaigua, New York, or something like personal property owned by James Smith. Moving on through the form now, we see it says against loss by blank. This is basically where the covered peril is described, so fire, lightning, hail, etc. would work here. So now let's talk about the time and origin section. It starts out, a blank loss occurred. Now that's a pretty confusing sentence on its own. If you indicated fire in the previous section as the type of loss, indicate the same in this blank area. Then you can move on to the time and then the day of whatever month it may have been, and then the year that it occurred. Then it says the cause and origin of the said loss were blank. Again, this is confusing because you may have already said what the cause was in the previous section, but here more detail can be given. As an example, the policyholder could elaborate by saying, a fire that started on the stovetop while cooking, or the wind damage example shown on our sample form. The occupancy section is designed to commit the policyholder to a statement about what the property is used for. If the policyholder lives in the building that sustained the loss, they could indicate that this was the dwelling. If they conduct business in the building that was damaged, they could indicate the type of business they operate, such as pizzeria or hair salon or whatever else may apply. Another section that confuses policyholders is one that deals with ownership interests. At the time of loss, the interest of your insured in the property described therein was blank. This line always confuses people, and to make it less confusing, the form could have just asked, do you own the property? But this one doesn't, so writing an owner is usually the best answer for this line. Then the form goes on to say, no other persons had any interest therein or encumbrance thereon except blank. Interest in this section relates to ownership interests, and it includes co-owners or mortgage companies. An encumbrance is any financial interest that a person or legal entity may have gained through mortgages, liens, deed restrictions, or easements. In many cases, there are no other interests or encumbrances. When that is the case, it is appropriate to write the word none in this section. To clarify, that is N-O-N-E, none. When there are interested parties, they need to be listed here. Changes in a policyholder's circumstances happen all the time. When an insurance company was not notified of any changes that took place prior to the loss, this section allows an insured to explain those changes. It says, since the said policy was issued, there has been no assignment thereof or change of interest, use, occupancy, possession, location, or exposure of the property described except blank. If there are no changes, it is appropriate to simply insert the word none here. If there were changes, they would be described here. If there are too many changes to list and they simply won't fit in this blank area, I have seen where a referral to an attached exhibit has been used. Now let's look at total insurance. This section requests the total insurance on the property. As mentioned earlier, there is a Schedule A on the back of this proof of loss form where the separate coverages can be listed under a single policy. And when multiple policies cover the same risk, the policyholder can use Schedule C. If there is more than one policy and coverage is apportioned, it will be important to put the total of all coverages in the total insurance section shown here. Now let's look at the valuation section. In the first part of this section, the form asks the policyholder to indicate the value of the building at the time of the loss. This is the known or estimated value of the building or contents in pre-loss condition. The loss and damage section would then require the actual cash value of the loss to be provided on the line that says, the whole loss and damage was blank. This will be followed by the deductible and then the total amount claimed, which would simply be the actual cash value minus the deductible. When a policyholder sustains a loss under a replacement cost policy, a regular proof of loss form will be submitted along with a document called a replacement cost agreement. The replacement cost agreement will give specifics about recoverable depreciation. Alternatively, there are single-page forms that serve as a replacement cost statement, as well as a sworn statement in proof of loss. After the valuation section, there are two important paragraphs on this particular proof of loss form. The first is basically a disclaimer that the policyholder makes by signing this document. It says that the insured didn't do anything to intentionally cause the loss and that they didn't submit any claims for items that were not damaged. The next paragraph has to do with subrogation. It states that the policyholder releases their right to any claims against a third party that may be responsible for the loss due to negligence, and that the insurer now has these rights through subrogation. This final bit says that the insurance company is not waiving any of its rights by furnishing a blank copy of this document to the policyholder. And this last area is for the policyholder to complete by signing the document in front of a notary. As mentioned earlier, whenever we mail a proof of loss, we now send a sample document that is filled in with some fictitious information in order to help give the policyholder some idea as to what should be put in the blanks on this form. Our most recent version of this sample now contains this helpful phrase at the bottom in order to make sure policyholders do not accidentally sign and return the sample instead of the form they need to fill out themselves. So now, as an agent, you should know everything necessary to understand what a proof of loss is and how to fill one out. We hope this slideshow was helpful. Thanks for taking the time to view it, and please feel free to contact me directly at 800-232-9118 extension 225 if you have any questions. And thanks for being an Ontario Insurance Company agent. If you would like me to send you a copy of our sample proof of loss form, please email me at wauten@ontarioinsco.com.